There were two factors driving the slowdown of the Chinese economy in 2012. The first was the continuing tightening of credit, which eased from about mid-year, but was not enough to dramatically turn things around. The second was the external slowdown, the slowdown in exports because of the global slowdown, particularly the recession in Europe, continuing subpar growth in the US, and slower growth in countries like Brazil. Now, looking forward in 2013, I don't think that the Chinese authorities are in a position to put their foot hard on the accelerator again, as they did in 2008 and 2009, when they pumped up money and credit. In that instance, it created a housing bubble and a surge in CPI inflation, consumer price inflation. They now recognize that that was a mistake, and they're anxious to avoid that, particularly because money is growing outside the banking system in what we call the shadow banking system. The authorities' view is that money and credit are growing adequately, and they don't need to do any more to inject stimulus to the economy. Similarly, on the external side, there's clearly very little they can do about the growth overseas, whether it's the US or the Eurozone or anywhere else. They have stopped the appreciation of the Chinese yuan, but I think it's highly unlikely that China will cause its currency to depreciate. So again, I would expect the gradual the growth of exports to be quite moderate. We're not going to have a sort of big surge in growth of the kind that we saw in 2009 and 10. And that means overall growth in China is likely to be only 7 or 8%, rather than the sort of 10 to 12% that we had before the 2008 crisis. The perspective that I would like to use here in talking about China's rebalancing is to remember that over the past 30 years, China has essentially built what I would call an exporting machine. All their focus has really been on building ports, railways, factories, machinery to go into the factories for export. All of this was directed very much at creating an export-led growth model. Now, that kind of focused attention over 30 years cannot be quickly unwound. So it will take a long time for China to rebalance the economy away from exports towards domestic demand. In addition, what they need to do in order to redirect investment, things like reducing subsidies and special incentives for exports, those things are hard to do because there are many vested interests now who would strongly object. A further factor is that they would also have to do a number of reforms, notably to the wage system and to the domestic financial system, and those are also hard to do. So for a variety of reasons, I think that we will be talking about rebalancing of the Chinese economy away from exports and towards domestic demand factors for at least the next decade and maybe even longer.